So what we had at the beginning of the year was an expectation of a number of rate cuts, and so that boosted confidence in the market. As we went into the second quarter, that shifted over to the private equity space, and we saw debt markets easing. There's also pressure on private equity to put capital to work, and so we started to see much larger transactions in the buyout space, and that's really what is driving those volume figures that you had there.
Absolutely fascinating. So take me inside some of these deals. What are the sectors that have seen the most buyout activity through the course of the year?
Yeah, well, technology is obviously booming. And if you look at a transaction like Darktrace, for example, that transaction sort of summarizes a number of the things that we're seeing here. There's huge interest in cybersecurity. It's a multi-billion pound buyout, but it's also a listed company. Now, seeing private equity playing in that space, doing those listed public to private transactions, that's a sign of the confidence I was mentioning and a sign of the buyout activity coming back.
So what do you think the market activity that we've seen this week is going to mean for deal flow moving forward? Because I really sense that we have just seen a huge shift in market sentiment, and obviously that's going to be impacting the private space as well. So a question I asked our guest earlier, is the party over now?
Do you know, every day we're seeing these huge shifts. One of the things that I was talking to one of my colleagues about yesterday is there anything really behind these market shifts? Obviously, you had the Bank of Japan last week. We have the US jobs numbers, and there are a few more key events that could come up. We've got key earnings from Walmart, Nvidia, because obviously that will give us a sense of what's happening with the AI bubble. But so far, there's no smoking gun, right? So my question is, are we in silly season, or is there something really that's going to, when we come back in September, when everyone comes back from their holidays, is this going to persist? If it persists, then absolutely, it's going to impact funding, it's going to impact transactions, it will really impact deal flow. My hope is that this is an August blip, and that we'll go back to deal making in Europe, because before last week we had a great pipeline.
Right. So what do you think are the factors that would support more deal-making activity through the rest of the year? Would it be lower interest rates in the United States and beyond, or are there other factors that could potentially propel and move that momentum forward, despite the concerns that we've seen raised this week about the global outlook and prospects for a recession?
Exactly. Well, rate cuts are always the biggest driver of M&A, and indeed that was what boosted confidence at the beginning of the year, and then obviously we've had rate cut expectations sort of normalise through the year. The thing is, for me, is this volatility in the market is obviously crucial. We have to find out whether this is going to be sustained or not. If we do see further rate cuts, that will absolutely generate more deal flow. One of the interesting things that's mentioned in the report is that we did see more of the large cap deal flow. When you look at the deal count in a number of areas, it hasn't been such a huge uptick. It's the driver in the numbers was these larger cap transactions. So if we see rate cuts, we'll hopefully see more activity across the full spectrum in the market.